Okay, recording video on Saturday, the 25th of April 2020. It's just coming up to 11:15 p.m. Chicago time. It's early evening here in Hawaii. Hope you had a good week's trading. You've not heard from me for a week or so, just been super busy. Plus, we have had a late season swell come in. It's just been epic, so I've been taking advantage of that. And this week, I've had some requests for charts on crude oil and gold. So I thought I'd run through those charts. Going to run through the daily and the tick charts for both crude and natural gas, and then gold and silver. But just before going through those charts, just to say, this is a historic, incredible day on Monday when we had negative prices on crude oil for a commodity, kind of unheard of. I hope everybody's kind of done their reading of the news articles that have kind of come in to understand why that happened. It's all to do with storage, and it's all to do with the particularities of the WTI contract, the West Texas Intermediate contract. That contract says that you have to deliver your oil, and you, as a holder of the futures contract on expiry, have to take delivery of your oil in Cushing in Oklahoma. Cushing has normally a huge amount of storage capacity, but because we're in lockdown, none of the oil is being used, not in gas for vehicles or for plastics, for fueling industry and so on. Because we're kind of throttled down with the lockdown, none of that petroleum is moving through the pipes and out of the system, and it's getting stuck in storage. And so because there's a lack of storage and the cost of storage has skyrocketed, in fact, one of the options for storage is to put it in an oil tanker, and the daily cost of renting, leasing an oil tanker has gone from usually about $10,000 or $12,000 a day to up to $180,000 per day. So 10 times plus increase in the daily cost of leasing an oil tanker to store and move around your crude oil. So the cost of storage now has become so high, it forced the price of crude negative. So you can see this on the chart here. This is the May contract of CL, which is the WTI contract, the West Texas Intermediate, versus Brent. Brent is kind of North Sea oil, but it's able to be delivered to multiple locations by tanker. So the WTI contract went negative $40. And at that same point, we still had, Brent sitting about $25 on that day. It did recover on the Tuesday, on the actual kind of settlement day, to $10, but it was kind of historic. Should it have happened? In my mind, it messes up a whole bunch of things. So first of all, all of your pricing models, option pricing models, arbitrage models, all those kind of things, they built in an assumption that the price cannot go below zero. So it messes all of those things up, number one. Number two, I'm not sure how the brokers kind of managed this, because I would have thought they'd have had zero prices being the limit on all of your kind of online platforms and so on. So I don't know how negative prices were being handled. Good for them for adjusting their systems in order to be able to do that on the day. But it's unprecedented, and I think we'll have to wait months before knowing whether it was actually a mistake to actually kind of go negative and not just to kind of zero out. Anyway, we shall see as we kind of go forward. Obviously, what's happening is two things happening: the oil price war, which has been started by the Saudis and the Russians versus the Americans, along with COVID happening at the same time. So these two things kind of coming together has caused unprecedented price declines in oil, and to some extent natural gas has been impacted as well. So let's turn to the daily chart of crude oil. This is my usual kind of setup, the two charts side by side. On the right-hand side, we have beta sine wave, which is based on price, and it calculates the cycles in three different time frames: the low, intermediate, and the high time frame. There's a factor of 3 between those. And using that cycle information, we calculate where the support and resistance levels are, again in those 3 time frames, and breaks of those support and resistance levels enables us to print uptrends and downtrends in price. So those downtrends and weakness is in white, uptrends and strength is in red. And you can see these support and resistance lines are these red and white lines here. On the left-hand side, we have everything to do with volume. First of all, better momentum, which is a volume-based momentum calculation. And then we use the average trade size to calculate amateur and professional activity. We have a trailing stop based on the professional activity, and we combine the price signals with the volume signals to calculate a combo trend, a combined trend. Strength and uptrends is this red background, weak and downtrends is this grey background. So crude oil, basically we kind of topped out at kind of $72 at the beginning of the year here, and we have been in this massive decline ever since. You can see we broke supports at the beginning of the year back in January, and we've been in this big downtrend on the daily chart. Professional activity here, it was Rambo patterns right at the high. Poor old amateurs kind of buying the breakout to $70. Wrong-footed, we went the other way, and as soon as we got through $55 here, you can see the professionals just selling this down, gap down, bang bang bang. These are all the announcements to do with the price war, Russia and the Saudis. So on the way down here, we had a read this week of minus 3.7 million on better momentum. That is below the read that we had kind of earlier on here. This was about 3.4 million. So we'll have, when this kind of confirms, when this finally reaches a low, we'll have an exhaustion pattern here. Yes, professionals have kind of come in at this level, kind of down here, $8, $9 or whatever. They've stepped in this whole range here, but in order for this to slow, that's the first step. Professionals kind of buying, picking it up on these extraordinarily low prices. We'll have an exhaustion print probably next week, get confirmation of that. But this thing is not going to turn around until the volume momentum changes and we have a bullish divergence pattern print. So we're well away from doing that on the daily chart. Plus, we have 2 supports that have been broken. The lowest and intermediate timeframes have been broken on the downside. We have to go see pullback to end of trends, most likely on both of those timeframes. So the lowest timeframe one has to be put in at some point. Yep, we had a nice bounce from sub 10 this week up to 16. But in terms of trend on the daily chart, yes, exceptional kind of low prices down here, but we're well away from finally doing all that bottoming activity, which is putting in the end of trend signals on a better sine wave and then putting in a bullish divergence pattern on momentum. Now, if we look at the tick bar chart, which is roughly equivalent to a 60-minute chart, you can see here, this is this week's activity where we went. Now, this is the continuous contract, so this isn't actually the May contract. This is the next one kind of combined, so it didn't go negative on the continuous contract, but that was, that activity kind of done it down here, down to 6.5, and we've had a bounce here, and you can see we've gone into an uptrend here. But we're below support on the highest time frame. We will find resistance when these 2 thick lines kind of come together. That's the highest time frame cycles. When they kind of come together, we'll put in a resistance at some point and we'll kind of come back and test those lows. But for the time being, we've got a little bit of strength going on. That for me is not convincing until we get above, what is this level, kind of 18.25. If we break out above 18.25, we could have a little bit of a short covering rally that could travel a little bit until we find that resistance kind of going in there. At the moment, kind of, Rambo patterns leading the way. Amateur up bar, the last one that we had kind of ticked up here. That isn't great, but potentially we could, go through those highs at 18 and go see a blue professional bar from which we'll roll around and kind of go the other way. So a little bit of strength going on at the moment, and I'd be looking for above 18.25 for a little bit of a runaway move after that. So long-term picture is still got to make that low, but in the meantime we've got a little bit of strength running until we get that cross. Natural gas. Now, natural gas doesn't trade the same as crude, but they're related, being kind of energy commodities. And again, natural gas has been a massive kind of downtrend here. Beginning of the year, we were up at $3.20, and then we broke through 280, bang, into a downtrend, bang, 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 all the way down. The picture on natural gas is different from crude. So crude, you can see on the daily charts, we have blue professional bars picking up the lows here. They're legging in, at this point here, they're getting out and getting short in expectation of a decline. But as soon as they start, reaching levels down at 30, they might be legging in and legging in back here in 10 to 20 for, picking it up as, good prices for kind of crude. But they're on down bars, those blue professional bars. If you look at natural gas, all the activity up here was blue professional bars, blue professional up bars, or at the highs up here at $3. When we came back up to 225, bang, blue professional bars at the highs. And then we've only had a bounce here because we've been led by the amateurs with Rambo patterns down here, down to 180. So the amateurs were leading the way, and that's why we've had a bounce from there. So we haven't seen blue professional down bars yet. We've had the first little pullback to end of trend. We need to see, resistance to support on the intermediate time frame. And, we got exhaustion and bullish divergence here, but we haven't seen, blue professional down bars. So on the daily chart, I don't think they're picking it up yet, which is kind of extraordinary because we're down here at 180. But we're coming into the summer. Natural gas is tends to have a swing during the winter months or leading up to the winter months, so it's not unusual to see kind of seasonal weakness in natural gas kind of around now. What about on the tip bar chart? Again, this is kind of equivalent to like a 60-minute chart, and you can see here at 210 we came into resistance. We had a little pullback to end of trend on the lowest time frame, another pullback to end of trend on the lowest time frame. We had a support resistance. That's a triple going on here, resistance in all three time frames. Big things happen at triples. We had blue professional flush patterns up here at 210. We tested back up, being led by the amateurs, amateur up bars, trying to take out 106, whatever. No, we kind of rolled around and we've gone into weakness here. We're breaking supports. We've got a pullback resistance on the lowest time frame. We're in a downtrend here, and we've put in all these flush patterns and bearish divergence patterns here on the upside, and bullish and exhaustion buy. We have to see those on the downside. So we're on the tick bar chart, we're in a downtrend here. You can see the weakness with grey bars here, a little push back up. So we're going to continue to see natural gas kind of sink down and test the lows, I'd imagine, until we see exhaustion sell on the downside and maybe a flush pattern on the downside, but blue professional down bars, where the professionals are interested in picking up the lows there. So that's natural gas. So that's the kind of energy kind of complex. Now gold. Gold, I've been out of kind of sync with gold because of this. When we bottomed in gold here at 1250, we didn't have blue professional bars down at the lows. We had nothing to signal that there was something going on here. We didn't really have exhaustion sell down here. And when we broke into this uptrend with these blue professional bars, they kind of bought that breakout. That's jumping the creek kind of move, getting the move going at this point. It just never looked right to me as a chart and a sequence, and so I've just been out in sync on gold and really haven't particularly understood it, I would say. And then the latest activity that we had, with all the market turmoil that we had all these huge blue professional bars, and I was saying, look for the testing of those that range, when we have huge range bars like that, look for the highs to be tested and the lows to be tested. Yeah, we tested the highs, more blue professional bars kind of came in here, exhaustion buy, bearish divergence, and we came down. But then at 1500, the pros, stepped in again, bang, and then we just forced it back up. And so now on this pattern kind of reaching new highs, it's all being led by the amateurs. So look at this. We had 5 Rambo patterns in a row, bang, bang, bang. Kind of coming up to 1750, 1800, kind of up here. It's still showing strength. We have put in pullback end of trend on the intermediate time frame and then the lowest time frame, but we're still, cracking above resistances, and we're still above these resistances on these two time frames. So maybe it's going to go up again to put in pullback to end of trend on the daily chart. I'm kind of amazed at that, the continued strength. I mean, this for me is not good. If we had a blue professional up bar into 1800 or whatever alongside that and weakness after that, then that would be significant in terms of topping activity. But I can't say that I think this is going to roll over because of these Rambo patterns right here. We've still got all of this kind of showing kind of strength because we're above resistance on these two time frames. So who knows? On the tick bar chart, though, you can see I think we're going to continue on to these highs. So you can see here, this is the, what is that, 10,000 tick bar chart, again, roughly equivalent to a 60-minute chart. We're in an uptrend. All these blue professional bars have kept the pro trailing stop just come up behind us. The last little sequence that we had a couple of days ago, professionals stepped in here on this decline, bang, and we kind of raced away to these new highs. So, and that was here. It was a little pullback to end of trend. We bounced off resistance on this highest kind of time frame, so that weakness then turned into an uptrend. So we're in an uptrend here. We've got two supports come in, pull back on the highest time frame, pull back in an uptrend on the lowest time frame. So that's there. So it looks like we're going to go through the resistance here at 1764. Looks like we're going to test up to the highs until we see, exhaustion buy on the highs. We've had our exhaustion sell. We've got to see exhaustion buy to mirror that, activity on the upside. So we're still in an uptrend in gold. I'm kind of amazed, but as I said, I've been out of sync on gold, and it's been choppy. It's been super choppy, but I think it's going to keep on, going up through those highs. Silver. Now, silver's diverged quite a lot from gold. And everybody's talking about the gold-silver, silver-gold kind of ratio being at extraordinary high levels. Silver has not been, as bid up as gold. Not particularly sure why that might be. If people are unsure about the financial system, it's gold that they'd run to rather than silver. Silver's always been used as a daily kind of transaction type material. But if you needed to do, if everything kind of, the pandemic kind of falls apart and society collapses, silver is what you'll need in your pocket to do day-to-day kind of transactions. But anyway, it's diverged from gold quite a lot, and we're in a downtrend on silver here. So you can see we maxed out leading into October last year, exhaustion buy. Blue professional up bars into $20, and we're under the lip here. I call this. So we come up under the lip here, trying to make it back up to $19. Can't do it. Turn around. Professionals sell it down, falling through the ice here at 17. Bang, and we kind of crash down to 12. And the rise that we've had back up, being led by the amateurs. All of this says we're still in a downtrend. We're below supports on the highest time frame, on the intermediate time frame. We've got a resistance on the lowest time frame. That bullish divergence pattern is right on the zero line. When we see that, we're likely to see another kind of move down that will cause at least a flush pattern or something like that. So at some point, this will roll over, and we'll go test those lows at $12. So on silver, it's in a downtrend. So on the tick bar chart, we're bouncing off Rambo patterns here. So the amateurs were trying to short it at this point, and we bounced quite nicely from there. For this to continue in an uptrend, this blue professional bar will need to hold. We've just had exhaustion sell at this point, so we got rid of quite a lot of sellers. So if we come back up through, the 15, 60, 70 kind of level, that's going to break us into a confirmed uptrend. So we could still have a little bit of a bounce going on silver, and potentially silver and gold could kind of move together if that kind of activity starts to work in tandem. So you have to kind of wait and see. Usually, the Rambo patterns, if that was going the other way, if those were amateur bars, up into 16, I would say, it's going to look weak, but we do tend to bounce off Rambo patterns and amateur activity like that. So let's see. Silver, as I said, I'm out of sync on gold and silver, so kind of wait and see what happens there. But I wouldn't be surprised if we had a little bit of continued strength in those two. Anyway, that's what I'm seeing on my charts at the moment. Is there anything in order to trade kind of going forward? For me, the most attractive one there looks like, kind of continuing to short natural gas at this point might be an opportunity kind of there. So might look at that with Monday's trade. Anyway, hope your trading is going well.